Okay, folks, welcome to Best Stock Charts. I have a lot of stocks on my radar screen as we proceed into the coming week, some of which we went over last week on Best Stock Charts, and a slew of new candidates. Now, as I was running my screens this morning, there's little doubt that the bias was to the long side on my screener. And there are some sectors which are, in fact, breaking out. Case in point, healthcare and the transports. We have some stocks to go over in those sectors in a moment. So the game plan for this video is to do a very high-level view of the stocks that we're watching for the coming week. Members, what we're going to do tomorrow is during the week ahead commentary, which runs about 30 to 45 minutes. We'll do a market pulse check, which is where we review the health of the overall markets using charts of the major indexes and sectors. Then we'll segue into our positions, and then we'll do a deep dive into best stock charts that we like for the coming week. So in this video, we're going to take a high-level view using weekly charts for our continuation breakout trades and daily charts for our extreme oversold stocks. So let's get to it. ERX, the Direction Energy Bull ETF. We were bullish on it last week. We did see a continuation move higher. However, we found resistance and we pulled back. I like the daily chart setup. Members will talk more about the daily chart setup tomorrow. But on a weekly macro view, higher level view, we do have resistance above. We need to respect it. Volume was about average last week. We'll talk about oil and its influence on the energy sector. How is oil looking? So more to come tomorrow on ERX. We remain bullish on energy. MDU Resources. I mentioned last week that we were in a tight trading range, and last week we broke out. This is a really nice cup with handle formation, and seeing a continuation breakout is quite bullish. We have a breakout in RSI. We pulled back, retested, and last week we moved higher. This is the type of hockey stick setup that traders absolutely love. Members, more to come on MDU Resources tomorrow on the week ahead commentary. Tomorrow being Sunday. Kirby Corp, KEX. Another one where we spoke about last week. We expected an up week this week. We got that up week. We did close off the highs of the week, though. So we have resistance above. So let's respect it. Let's identify where that resistance was last seen at. Right back here, back in December, and prior to that, you can see barely in November. So not a huge amount of resistance, but resistance nonetheless. So we'll need to work through it and grind higher. Volume, rising sequentially, good stuff. No breakout yet on Ultimate Oscillator. Remember last week I said we had a divergence. We had our price action moving higher, yet Ultimate Oscillator was not breaking out. It was making lower highs. That has not changed. So the jury is out, but our bias is to the upside for Kirby Corp. Members, more to come tomorrow on the weekend commentary. Canada Goose Holdings. We spoke about this one last week. It had a rough early part of the week. This is not a market where you want to go catching a falling knife. What matters is where the stock closes on the week or on the day. We closed well last week. We didn't close at the highs of the week, but we closed significantly above the lows of the week and above, most importantly, above the breakout point. RSI stalled out a little bit. Stokes still rising, and you still have intact your double bottom setup and a breakout above the 50 level on Stokes. Volume declined last week to the upside. Members, we'll go over the daily chart and perhaps an intraday chart tomorrow on the week ahead commentary. All right, I mentioned earlier healthcare. The XLV, we broke out. That was after we had broken down back here during the week of March the 19th, a very ugly sell-off. But we have closed above prior resistance. The question is, do we stay there? Now, many times I'll speak about looking for double bottom setups on your stochastics. That isn't always the case. History has shown that more often than not with the XLV, you get V-shaped recoveries on stochastics, and you'll get a higher low, which is what you had back here, back here. So that's what we'll be looking for with the XLV and the healthcare sector. Volume last week was above average. So members, more to come tomorrow on the XLV. DATA, Tableau software. This is not one that came up on my screener. This is actually a member stock chart request that one of our members suggested that we review. And I have the good fortune of having some very intelligent members, and this is a really nice setup here. We have higher lows getting put in. All we're looking for now is a higher high. We retested support last week. We closed well off the lows. Stokes are rising. RSI stalled out a bit. Volume about average. So we'll talk more about a potential long entry trade on DATA tomorrow on the weekend commentary with members. So earlier I mentioned that the healthcare sectors were breaking out. Transports, they were breaking out. And in fact, the transport sector broke out and is now retesting a breakout point. Members will talk more about the health of the transport sector tomorrow on the week ahead commentary. But two components of the transportation index, one of which is UNP, the other is KSU. I mentioned KSU last week. We'll go over it again in a moment. They are looking very strong, the railroads. So there's something going on here. So while I would love to get wildly bearish on this market, the market is sending us a signal. We have energy strong. We have transports, which are strong. So I don't want to get caught up in my own rhetoric about the negative influences on the economy, because I could be as bearish as I want about the impacts of debt, entitlements, etc. on the economy. When you see the transportation sector breaking out, you better pay attention. So UNP remains in a very tight trading range. We closed well off the lows of the week last week. Volume was high to the downside, but a lot of that was buyers, right? We were down on the week. We closed well off the lows of the week. We were down about 1/3 of a percentage point. Look at our Stokes. These Stokes are massive. A higher low, double bottom setup, very close to a breakout. So this is the market sending us a signal. So while not ready yet to go buying the transport sector, it certainly has my attention. We'll talk more tomorrow about the daily chart with members. KSU, another railroad stock weekly chart. It didn't have as strong of a week as UNP, but it did attempt a breakout. That breakout was rebuffed. On the stochastics, however, we saw a breakout on the fast line. No breakout yet on the slow line, but this is the market sending a signal that we may, just may, see the beginnings of a breakout here on KSU. We have an indicator which may, parenthetically, may be setting up for a breakout. I don't like the Stokes. We continue to put in lower highs. Volume to the downside was strong, and ultimate oscillator is breaking out. So if I had to choose one or the other, UNP or KSU, to buy, it would be UNP. But let's be honest here. In all probability, if one breaks out, the other will break out as well. What do they need to break out for each to break out? The transportation sector. That's what we'll be watching. We want to see that parent sector break out. Then we'll look for the healthier of the two to add to our buy list. Tenant healthcare. We already went over the XLV. Now we have an individual name which is looking good. Weekly chart. Tenant healthcare has broken out of a long-term base, and we are in a bull flag formation. That's a continuation breakout pattern. The problem for longs here is that you have a ton of overhead supply here that it's got to work through. So what you'll need to see here are these up volume bars rise. What does that imply? It implies that you have institutional demand, and it's those institutions, not mom and pop buying 100 shares, but those institutions that are buying up big blocks of stock that will overwhelm these buyers back here who are just looking to get made whole. They've sat for 2+ years with this red entry, THC being a red entry on their trading platforms, and the minute they see it turn green, they're going to sell. They just want to get made whole. It's psychology. It's understandable. It is overhead supply, resistance. Stokes are rising. RSI is rising on a weekly basis. Good stuff. We're lacking volume. We need a breakout on rising up volume. Members, more to come tomorrow on the week ahead commentary. Alliance Bernstein Holdings, AB. A beautiful, beautiful chart. RSI hooking up, breaking out. Stokes poised for a breakout. We are in a wedge formation. A bullish key reversal on the week last week. We're looking for a continuation breakout next week. Volume, very good, above average. Members, more to come on AB. The next chart up is an extreme oversold stock, and it is Trivago. Now, it makes it onto our screener because it's got RSI 20. Now, many of you may be reading Technical Analysis for Dummies, and it says to buy a stock when the RSI goes below the 30 level. That is a generality, and when you use generalities in the stock market, you will go broke. This stock remains a short. It is not to be bought yet. However, in the coming days, it will become a buy, assuming that it meets certain criteria. There is a catalyst for this stock to proceed higher, and we'll discuss that with members on the week ahead commentary tomorrow. You need to have a catalyst with extreme oversold stocks. So this past week, we saw a horrible week. We were down on a weekly basis, nearly 25% on the week. We have RSI, as I mentioned, at 20. Stokes, very oversold, but they can go lower. We rallied on Friday, but we reversed to close off the highs of the day. I think that we are going lower. And with stocks that are trading below $5 per share, you can easily see RSI below 10. So I would not be a buyer of these shares in the next couple of days. I think that they are going lower. We may, in fact, short them. Now, normally what I would be looking for here is historical support. The problem that we have is that weekly chart, there is no historical support. So what we need to do is rely upon our daily and intraday charts to divine where we want to get involved with the stock, and we use our candlestick formations as guides for us to identify when we have buyers below. Case in point, on the 26th, we were leaning into the third standard deviation Bollinger Band. You saw buyers came in, they bid the shares off the lows of the day. They anticipated a pop because this move was unsustainable, and they were right. But you needed to book profits quickly, which they did, and the shares will now proceed downward. Can we inch higher for another couple of days? I hope we do, because I'll short into it. I think we're going lower here, but eventually they will become a buy. So members, more to come on Trivago. Now, the next chart up is Bristol Myers Squibb. I'm not sure whether or not I went over this stock last week. I think I may have skipped over it, but I did discuss it with members as being an extreme oversold stock. And it's one that came very close to our buy point, but it didn't hit it. We came close, but we had to stick by our discipline. These are stocks, this type of extreme trades can really damage your portfolio if you're not disciplined. If you do not wait for the shares to hit historical support, you'll buy too early, perhaps get too comfortable with the position, and then after a brief move higher, the shares just roll over and fall apart, and what was a small profit becomes a large loss. So we need to respect the fact that BMY, let's go to a weekly chart. In fact, let's use a monthly chart. BMY has put in a double top. It's very close to a significant breakdown below historical support. It did not touch historical support this past month. It came close, but no cigar. Now, we only have one trading day left to go in the month. So were I a betting man and I was looking at this monthly chart, would I bet that in all probability we would see a lower low month over month? Yeah, I have little doubt that we will. And the way that the daily chart is setting up is that we will get a pullback perhaps Monday or Tuesday, because this is a dead cat bounce. And note the sellers, how they're moving in already. And we have a lot of overhead supply, and our volume dropped off dramatically on Friday. So if we don't have volume that was significant enough to have us close at the highs of the day on Friday, well, where's the volume going to come from to push us through all this resistance? I don't think it's going to happen. I think we're going lower here on BMY. And honestly, right now, I'm thinking about shorting it. And as it drops back down into extreme oversold levels yet again, we will look to accumulate the shares at historical support levels. And we'll talk about where those support levels are on the week ahead commentary tomorrow. And that's it for this week, folks. Everybody have a fantastic weekend. If you watch this on YouTube, please subscribe to my channel. Leave a comment below. I'll definitely get back to you. Click that bell. Get notified of future videos. Give me a like if you would. If you're watching this on StockTwits, Twitter, Facebook, you know the deal. Like, follow, subscribe. And if you're watching this on the website, enter your email address. We hate spam too. We'll send you out a couple of free trade tutorials. And everybody have a profitable trading week next week. Members, more to come tomorrow on the week ahead commentary. Be well.